Oh yeah, good morning, folks. Lovely start to the day. We obviously have Amazon Prime Day. Can't lie to you, but we're gonna be talking about Johnson & Johnson earnings because it's what we do. Okay, we got earnings to talk about. Sorry, Amazon. We'll move you to the wayside. Carry on, my wayward son. Johnson & Johnson down 2.29% after or before open, or really during the normal session. It's crazy. It's crazy. I'm used to being up early, been working late this week, so being awake, waking up by the time the market's already open, it's pretty wild to me. So we'll look at these earnings real quick, and you see, this is some quality stuff here. Non-GAAP EPS of 220 beats by 22 cents. I highlighted the whole thing because I'm stupid. But GAAP EPS of 133 misses by 37 cents. So on a GAAP profitability standpoint, there's actually a miss here, which I don't think is completely unexpected. We were already expected a decline year over year. I don't think this is unexpected at all. With a lot of the safety measures they've had to increase really and go through, this makes sense as far as an EPS standpoint. So nothing crazy. But what I want to point out is this revenue number, which is stellar for a company like Johnson & Johnson. Revenue of 21.08 billion, which is an increase of 1.7% year over year. Beats by 930 million. That's crazy. So again, I mentioned this in my earnings prep video. They were actually expecting a decline in terms of sales for this company. A decline? Really? Have you lost your mind? Because I'll help you find it. Anyone? It's a good one. I told you this would be a beat in the low single digits. I told you it would because I'm not stupid like analysts are. The analysts are stupid, and I'm not. They will point out that Darzalex has a revenue of 1.1 billion versus an estimated of 1.01 billion. I think they only mention this because of a large beat, obviously. It's a big drug for them, too, so it's one of their staples for myeloma. That's how you pronounce it, just in case you were curious. I just wanted to teach you how to pronounce the disease's name. But so good sales for that. But Imbruvica, their really, flagship drug, was down 1.03 billion compared to a consensus of 1.08. So that was down a little bit. And then as you get into guidance, which, believe it or not, this company actually had the nerve to get into guidance. They had the nerve. Are you kidding me? It kind of sets me off that they had the nerve to do that. So revenues of 81.2 billion to 82 billion. This is for the full year of 2020. So this just is really including next quarter, which you can do the calculations. You know what I'm saying? From 79.9 to 81.4. So they're increasing what you're expected in terms of the guidance there. Consensus was only 80.66 billion. So that's actually incredible guidance. So to see that this company is down, it's kind of crazy. I know the total market is. But again, I think overall it's a little unfair that this company is down right now. The stock should be up. And from a non-GAAP EPS standpoint, 795 to 805. From 775 to 795. And again, this is increase from prior, and consensus is only 789. So overall, big beat on consensus. So for me, the thing's up on enough to where, especially from that revenue perspective, that should be enough to drive this. But again, as I mentioned, it's a boring stock. It doesn't react well. The people who invest in Johnson & Johnson aren't the people who invest in a Tesla, let's say, who are going to be hyped if you see even 1% sales increase for Tesla. They're still going to be, give me all my money. Give it, take it. Take it, Elon. But Johnson & Johnson investors, they're boring people, okay? It's a base of the portfolio, and they don't care that much. They're just, they love consistency. That's what they want. So overall, we look at the more details here. we see Johnson and Johnson. Obviously, revenues as we saw. Consumer health saw 1.3% increase, and that was beat the consensus on that aspect. We also see from a pharmaceutical perspective, we saw a 5% increase. Medical devices was down 3.7. No bueno on that aspect. But as far as key products, Remicade down 18.9. Simponi up 0.0 or 0.9. Stellara up 14.7. Tremfya up 13.1. Edurant up 8.1. Persista up 3.5. Darzalex, as we saw, up 43.8, so that's why, again, they mentioned it there. Amburica, though, still up 11.9, just didn't hit the consensus, but still good growth there. Invega up 8.8. Zytiga down 20.4. Xarelto, and you wonder, this is up 2.9 by the way, you wonder how we pronounce these. Well, guess what, if you ever watch TV, you know how many freaking medicine commercials there are? I know how to pronounce all these freaking drugs. Come on, get out of here. Opsumit up 13, Uptravi up 23.6, Invokana up 24, and no comparison for Erlita. I haven't heard that one. That one's a new one to me. But net income saw a 102% increase. Are you kidding me? Is that accurate? EPS of 1.33 saw 101% increase. Holy frick! That's what I call heck yeah. And again, we already saw the consensus. So if we look obviously at their slides, which we will do, because we love looking at the slides. So as we look into these slides, again, overall consumer health sales, was 3.5 billion, and that includes obviously your products. Like, that's right, they own it all. I mean, this company owns it all. You've got Listerine, Tylenol, Band-Aid. I mean, this is the stuff that Johnson & Johnson does is what I would consider quite incredible. Quite incredible. I don't know if you agree, but I know I agree. So, overall worldwide pharmaceuticals, the drugs we mentioned, 11.4 billion, obviously the biggest aspect, and the medical devices of 6.2, down a little bit, nothing too crazy. And obviously as we get into some good stuff here, overall 2020 sales, we can look at the differences in terms of regions. So you see from the U.S. perspective, saw a 2.7% increase. Europe saw an 8% to the Western Hemisphere, excluding the United States, so Canada, South America, Mexico, saw a 12.9% decrease, not good, and Asia Pacific saw a 2.7%, and Africa as well. So overall, international up 0.6 though in general. Thanks to Europe did a good job. Europe, you did one heck of a job. You did one heck of a job. I can't lie. And worldwide up 1.7. Third quarter highlights. Obviously, you see sales, GAAP earnings, big numbers here. From a GAAP earnings perspective, look at that. GAAP EPS up big. We like to see that. So I just don't get it. I just don't get it. I don't get it. I don't get what the numbers are doing here and why the stock's down. It finds it weird. And here obviously a breakdown of what attributed to what. Nothing crazy as far as these are concerned. Nothing crazy at all. Adjusted income before tax, good number. I mean, these good numbers here. So, that's good numbers over here. Hey, what's up, Joseph Walk? How you doing? One thing you need to mention, obviously, as they get into free cash flow, they don't necessarily give a balance sheet besides every year, so we'll see it next quarter. They'll show their full balance sheet, but for now they give a shortened one. Cash and marketable securities of 30.8 and debt of 37.8. So overall, net debt $7 billion. Not beautiful, but free cash flow of $13 billion should be pretty darn good to help recover that. But again, that free cash flow typically gets put into dividends because it's a nice dividend payer. It's a lower priority. Obviously, they're focused on the organic growth business needs, but free cash flow, obviously, pretty important. They get that through share repurchases, competitive dividends. That's where a lot of that stuff goes. $2.7 billion in dividends were paid in quarter three, and $2.8 billion was invested in research and development. Crazy stuff. So yeah, overall that would be your quarter for Johnson & Johnson. I hope you enjoyed it. Hey, Joseph Walk, you're back. Really hope you enjoyed it. How do you pronounce Thibaut Mongon? I think I did pronounce it pretty well. But hope you enjoyed and you have a good one.